Okay, hello everyone. This is CapitaLand Limited Investor Day 2024 presentation. Alright, this is where they lay out their plans for the future. Alright, so I think it's easier to read from the news release. Alright, this was released on 25th November 2024. So they say their target to double fund under management to 200 billion. Right, this one we already know from the annual report from the last presentation. Right, this by 2028, and they also aim to raise operating earnings by over 2 times to more than $1 billion by 28 to 30, with 60 to 70% coming from its for fee income related business or the FRB side of their business. Alright, so let's try and have a look at their annual report. Alright, so this was the annual report we looked at the last round. So this is their business model, right? They have two arms. The first arm is the fee income related business, which we just discussed, right? So they make money from these businesses without owning them, right? So listed fund management refers to the REITs they own. So for example, they own CICT, right? In CICT, there's the part of CICT that is owned by the open market, right? For example, us, when we retail investors invest in CICT, we own a part of the REIT, right? But for CapitaLand Investment Limited, right, they still get funds from this part of the REIT because someone has to manage the property, right? So when they manage the property, even though we own the REIT, we still have to pay them a management fee. So in this way, it's asset-like. That means they don't have to own that part of the REIT to make money from the REIT. Of course, there's the private fund management side where private funds actually invest in them, right? Again, they don't have to come out money, right? Lodging management, I think, is more on the side of escort, right? So things to do with hospitality, more to do with hotels and such, right? Commercial management, this refers to things like Kallang Wave Mall, which is, I think, under sports school. I believe this is owned by sports school. And what happens is that for Kallang Wave Mall, right, they do not own the asset, but sports school don't have the expertise in managing a mall, right? Therefore, they hire CapitaLand Investment Limited to manage for them, and through this, again, they make money from management fees, right? So this is very similar to this. It's just that this part, they actually list the REITs and they have partial ownership, okay? But the money they make from partial ownership, I believe, falls under this part, which is the real estate investment business. This is the part where they're trying to make it a smaller percentage. So they're trying to emphasize the top half and not the bottom half, right? So that's what they're trying to move forward to do, right? So that's the FRB side, right? So it's the top half business that they are interested in making bigger, right? So anyway, FRB growth is expected to be driven by steady expansion of its REITs platform, accelerated private funds growth, and greater scale in logic management and commercial management, right? Through organic expansion, new listing and funds, right? I suppose they're going to list REITs, more REITs in the future, right? And mergers and acquisitions, right? They're going to set aside significant capital for M&A and new growth engines across Asia Pacific. Alright, they're going to invest 40% in this SC Capital Partners Group for $280 million, and this is again going to increase their FUM by 11 billion to 113 billion. Alright, so their aim is to go to 200 billion, right? And I think as of 2023, they were something like 100 billion. So this is one way to increase the FUM, right? They also this is actually part of their maiden entry into Japan REIT market, right? So I'm a bit questionable about this because they say it's to enhance geographical diversification of the portfolio. On one hand, I understand diversification, but on the other hand, I also question whether it's diversification, right? I'm not sure if Japan will do well in the future, but they seem to think so. So let's see, right? So they also want to grow their Asia and India businesses, optimize their China portfolio, right? So the question mark here is, what does optimize mean? All right, is it reduce, stop investing, reinvest? All right, we'll try to understand a bit more later, right? Leverage M&A to grow our focus in Japan, Korea, Australia. So you can see these three markets they are very interested in, and look to ex-Asia developed markets such as US and Europe next. So basically, they want to go all over the place, right? Which again, I'm a bit concerned about, because you diversify too much, I'm not sure if you can actually manage everything well, and in the end the performance might be quite lackluster, right? So one example is CapitaLand China Trust, right? Initially it was just a retail REIT, then they expanded to the new economy side, and it turned out that part was really bad, right? So I mean, I don't know, might not happen in this case, but we'll see, right? So they want to be an asset-light global REIT manager, right, as mentioned before, right? Since 2021 they have recycled money, 24 billion across CLI, right, 11 billion from China, right? They say that they are quite I think they are quite big in China. Somehow a lot of people want to invest in them in China, so they raised 50 billion renminbi, or 9.2 billion Sing dollars in China. Alright, so they remain committed to China and want to drive their China for China strategy to grow their fund management platform. So I think what they're trying to say here is that they're trying to reallocate funds in China to maybe better places, right? That's my reading into what they're trying to say. Okay, so they want to focus on the 3 secular trends, right? So that means to say these secular trends means that these are trends that are macro in nature. They're happening in the background, and if you generally companies that ride on these trends should do well, right? So demographic changes, which refers to aging and mobility issues, right? Health span, age-suited living, right? I don't know if this refers to nursing homes in the lodging side or not, right? Because they say providing enhanced opportunities for CLIs, lodging, living and wellness businesses, right? I'm not sure which part this part falls under. Could be under lodging as well as its REITs and core products, as demand for income-focused financial products grows, right? I suppose this means that the old people need income-focused financial products, right, to pay them when they are retired. Alright, so disruptions due to macroeconomic issues, right? So they are trying to expand the opportunity in private credit, right, and as well as they're trying to leverage on the increased demand for their logistics and self-storage assets, right? Self-storage assets, one example is, I think in other countries it's more prevalent, right? Singapore not so much, right? So there's these big storage places where people keep their stuff over long periods of time. One example is that has self-storage, I believe, is United Hampshire REIT, right? And then digital trend, this one, data centers, nothing much to talk about. I think everybody knows that it's a big thing, right? They hired 2 new senior positions, right, in Australia, right? So CEO for Australia and CFO. So I think they are really quite focused on Australia, which again, I'm not sure if Australia will do well in the future, right? That's a question mark. Right, so that's their ideas moving forward. Alright, we'll just look at the presentation. I won't go through everything because some of it is like already mentioned. Alright, so all these things I mentioned. So this is their diversification plans, right? You can see that China is like that. In the future, China looks slightly bigger, right? But you can see they are trying to add all over the place, right? Including Southeast Asia, of course, right? Such that China becomes a much smaller part of the pie, right? So I guess that's their way of de-risking from China. So they say China's contribution to CLI to moderate in terms of percentage. I don't think there's so much more to talk about. All these things are very... there's a lot of numbers, but I don't feel like it says a lot of things, right? So I actually went through the first half and the third quarter results, and so this is their expectation. So currently this is their fee related business operating PATMI, right? So 2021 to 2023 there's an increase, and in the future they expect to go up to this value over here. So I don't think there's that much to say here. These are their results, right? So this is first half 2024 financial results, right? So this should be January to June, I believe. Alright, so I'm not going to say too much, just that their fee related business you can see is on track to becoming a bigger percentage as opposed to their real estate investment business, but it's partly due to the fact that the real estate business did drop slightly lah, right? So I'll try to look for that part. Okay, so you see the fee related business, right? There are 4 verticals lah. So we talked about just now the listed fund, private fund, lodging management, and commercial management. Okay, you can see that everything is up except for the listed fund management part, right? It's down 3%, right? So generally it's quite okay, doing quite well, right? All these things again are very nitty-gritty details I don't really want to go into, right? Okay, so these are some of the interesting details I was picking up. You can see what is doing well and what's not doing so well lah. Right, so you can see that occupancy wise in Singapore is quite strong across the board except for new economy, which it includes things like industrial, logistics, stuff like that. Okay, I think data center may fall under new economy as well, right? So you can see shopper traffic is up 2.6%, but sales is down 2.5%. This one is for the retail side lah. Okay, clearly this for retail only, right? And you see China is sort of the same lah. Shopper traffic is up 9.8. Again, tenant sales is down. So you can see that people are not spending lah. So I expect that retail malls, right, I don't think they can move up the rental revisions in the more further future. I think in the near future it could be still okay because like some rentals have not been revised upwards yet due to the upward swing in the previous quarters, right? The upward swing in the previous quarters, the tenant sales improved, but they haven't increased everybody's rents yet. So maybe moving forward, in the short term, the rents will increase, but this is a worrying picture for the longer term. If it carries on declining, right, we have to monitor the tenant sales issue with retail REITs, right? So this type of numbers, again, once you know the big picture, actually the nitty-gritty, I don't think is that important, right? Because there's a lot of small changes here and there, right? Yeah, so they didn't say too much lah. They are targeting asset-light strategy, we already know that, right? Increased fee-related earning, which is the asset-light side model, whereby they don't own, they just manage and collect fees, right? Landscape remain challenging with high interest rates in many markets, right? So let me try to see whether I can find the, there's a part that shows that this revenue increase and this revenue decrease. I'm a little bit sorry I can't find it. Yeah. Let me just scroll through a little bit. I hope I can find it. Yeah, no, never mind. I'll look at the third quarter one, right? So this is 6 November. Just now that one was 14 August. So this is basically this year's results lah. Right. Again, nothing much to say. It's quite they just talk about the divestment of Ion Orchard, right, which is the main transaction they have this year, right? So Ion Orchard, $1.9 billion divested to CICT, right? So that's why I was saying that sometimes when CICT buys this kind of property, right, it can be a pro and con thing lah. But for the parent company, normally I think, right, it's just a pro because you just get the cash, right? So it's hardly an issue for the parent side. Okay, lodging management, steady growth, right? That's fine. Yeah, so you can see that this one, I found it here, right? So this is year to date. So this is the latest numbers, right? You can see the FRB revenue is up 6%, and the REIB business, which is the asset heavy, that means this is the part of the REIT that they actually own under the CLI umbrella, right? This down 2%, right? So this is a slight concern, but generally they want to grow this anyway. So yeah, I don't think there's too much to say. I think this is year to date. Yeah, so this is a more updated value, right? So again, listed fund management is still down 1%, right? And the rest are looking positive, but lodging management looks like it's improving, right? Earlier we saw the 6 months data was better, right? I think so. Yeah, you can see 6 months data is up 4%, right? But listed fund management improved from 3%. This is the 6 months data, this is the 9 month data, right? So this one slight improvement, the drop is lower. This one slight improvement, right? The increase is lower, right? Overall it's up 6%, which is slightly worse than the 6 month performance. So I would say that the improvement is dropping. Alright. Yeah, with that, I don't think I have too much more to add. Sorry for the long presentation. Again, none of this is advice to buy or sell. Alright, thank you for listening.